The Tampa real estate market was on a tear over the last couple of years, but now things have taken a big shift. Or have they really? Hey everyone, it's Kristen Fidel with Fidel & Company Real Estate in Tampa, Florida. So the real estate market in Tampa has been on a tear for the last couple of years, and you have probably experienced it in one fashion or another. From the high-flying, above-asking multiple offer situations to the crazy low interest rates that lenders continue to churn out, there was something for everyone. But now it seems that things have fallen off a cliff. The tide has changed, people are slamming on the brakes, and all is quiet now on the Western Front. Okay, seriously, we all know that the market has shifted. So the real question is, how severe is the shift? How severe will it get? And more importantly, what should you be looking at if you are a buyer or seller in this market? So let's look under the hood and see what the true condition of the market is. Initially, there are three key areas that we want to look at to help us better determine where we are headed. Those related to the overall market inventory, new homes coming to market, and the original list price to close price ratio. There are some very interesting aspects of these items that demonstrate market momentum when we begin to look at them as a whole. The first graph shows all inventory of residential homes on the market. As expected, we are seeing an increase in homes on market since April of this year. Not a big surprise. However, if we look at the second graph of homes hitting the market, for the first time, we actually see that number going down. Yes, down since June. By taking these two graphs together, we see the housing inventory is not clearing. This is proven once we look at the months of inventory in the pipeline, especially since June of this year, when the trend for increasing inventory levels really begin. Okay, the last graph we look at is the original list price versus close price ratio. Over the last year, we have seen basically a 100% ratio between these two prices, which means that homes on average were selling at their list price. However, this peaked in April of this year and has been on a downtrend ever since, with this number hitting a low in September of just above 96%. This being said, if we look at a 10-year chart, we are just now getting back into the standard trend line range. So, where does this leave you as either a seller or a buyer in this market? Here's some things to consider from each side. First, the days of putting a home on the market at a crazy price is not a valid strategy if you truly desire to sell. You need to price it right, and using prices from the early part of the year will not cut it. Remember, buyers were willing to stretch on price when interest rates were low because their monthly payment was manageable. Now, with almost a doubling of rates, that is no longer realistic. This, along with a reversal in the stock market, has probably made buyers' assets shrink as well. Second, consider offering additional incentives to buyers. In particular, the potential to buy down a rate has been a hot topic of conversation within our buyer community, and that will only continue if rates continue to escalate. Third, many buyers have changed their expectations on what they are looking for in a home. In particular, homes that are selling the fastest in this market are those that have been renovated. They don't want to do updates. No problem, children, do they want. They are looking for homes that have been renovated, and more than that, homes that have all the major warranty items like roofs, air conditions, electrical, plumbing, all in good condition. As more of a buyer's finances are moving towards their mortgage payment, they have less discretionary cash on hand to do a major kitchen remodel or replace all the flooring. Now, on the buyer's side, it is more of expectation management. While prices have come down from lofty heights, there are rarely any fire sales, particularly in Tampa. We are just now getting back to a more normal market, and while coming off the list price is certainly becoming more common, submitting offers that are 25 to 35% below ask is not going to get you very far. From a financing side, rather than focusing on a 30-year fixed, consider an adjustable rate mortgage. We have seen 7 to 10-year ARMs with interest rates that are much less than the 30-year fixed. Really be diligent on seeking out a variety of options. Now, from a negotiation standpoint, you are getting more power, but don't let that go to your head. It's becoming more common for buyers to ask for some closing costs, a rate buy down, or credit for future home improvement. Okay, now as we look forward over the next 3 to 6 months, things will be rocky, but not dire. We will see inventory levels staying slightly elevated, but do not anticipate a glut of housing to hit the market. We expect rates to stay right around where they are in the short term, with the future of 2023 getting some relief. What we don't see is rates going back down to the lows over the last few years. From a pricing standpoint, those houses that are in excellent condition, i.e. newer construction or complete renovations, will have a leg up over their competition, while properties needing a rehab, land, multifamily will have much softer demand. These are certainly interesting times, and while no one can predict the future, by watching the trends, we can at least have some insight to prepare for the future.